Good afternoon, good morning, good evening, wherever you are in the world. Welcome to LBMA Webinars. Today we are looking at a spotlight on gold recycling. For those of you who aren't aware, we did a report, or we released a report written by Metals Focus last week of the same topic. And today we're going to delve in a little bit further with Neil Harby, the Chief Technical Officer of LBMA, and Neil Meader, Director of Gold and Silver for Metals Focus. So it's going to be a double Neil show today. Before I do hand over to our panelists, I'm just going to take you through a quick housekeeping slide. If you do have any questions throughout the webinar, please just submit those into the Q&A function of your screen. It should be at the top or the bottom, depending on what device you're using and what version you have. If you can't find this, do send us an email to ask@lbma.org.uk, and that goes to you as well if you are watching this back recorded, and we will send those questions along to the panelists. So Neil Harby, Neil with an H, I hand over to you.
Okay, Taylor with an E, thank you very much. Yes, well, welcome Neil M. Thanks for joining us for this webinar. Those of you who are joining this webinar, the reason we want to put the focus on recycled gold is really, well, it's a hot topic. It's a very happening thing at the moment. So much so that I've just jumped off the OECD session in Paris on literally recycled gold. It's a very interesting subject, and we hope to go into a little bit more on that subject today. So, but the key thing from the OECD conference and the key thing message from us today is it's all about data. You've got to understand the data to be able to understand the market, and that's why certainly we commissioned this report from Metals Focus, so that we make sure that the data we're reporting when we report our country of origin data, for example, has been sense checked, and it makes sense to us, and it makes sense to the people we're sharing that data with. So opening data fact is that 45% of the throughput of LBMA Good Delivery List refiners is sourced from large scale mines, LSM, which means that 55% is not. And as you know, less than 0.5% of gold going through the GDL refiners is ASM. So what is that 55%? At the LBMA, we categorize anything that has not come directly from the mine as recycled. However, that's a very big catch-all sort of description. We do use, well, the definitions that we use are available in our Responsible Gold Guidance, which is currently on its version 9. But when it comes to definitions, however, there can be some differences, and this again has come out of the OECD as well this morning. For example, without stealing Neil's presentation, Metals Focus classify what we would describe as conversion business. They would put it under bullion reformatting. So this is where, for example, grandfathered 400-ounce bullion bars of 99.5% purity would be converted into 99.99% purity kilo bars. As we report on all feedstock to a refinery and reconcile with the reported output of the refinery, this material will be included in our numbers, but not necessarily in the Metals Focus numbers. And we're going to touch on that with Neil a little bit later. If gold is being sourced from LSM, a number of LSM, sorry, I just got a message through, can we turn the camera onto the speaker, not the slide, Taylor? So if you're sourcing gold from a large scale mine, you pretty much know who owns the mine, where is the mine located, what is the expected output per annum, is gold being mined responsibly. It is often known where the mine doré is even being refined. That's not necessarily public knowledge, but most people know which mines are going to which refineries. Recycled gold has a different set of challenges, requirements, and considerations to ensure it complies with responsible sourcing requirements. Understanding the nature of recycled gold is critical to ensure that non-responsible sources do not enter the legitimate supply chain in disguise. And again, it's not being misrepresented as something else. And certainly we have issues with ASM being represented as recycled gold. So over to Metals Focus. Metals Focus is a leading independent precious metals research consultancy. And I'm quoting you here, Neil. With a team spread across 9 countries, we are dedicated to providing world-class statistics, analysis and forecasts to the global precious metals market. So today we're joined by Neil Meader, who is the Director of Gold and Silver at Metals Focus. So again, easy question, Neil. Why did you do this report?
It wasn't surprising you actually asked us to look more into this, that we independently have seen more inquiries coming in from some of the jewelry guys on the issue of recycling. And as you can see from that initial slide that we showed, it's not really a volume story. That what the amount that's actually coming back into the bullion market isn't anything to write home about. So it's clearly coming through from a responsible sourcing perspective. And I think it's perfectly understandable that when that comes to the fore, people need to know the statistics that are out there on recycling and what they may or may not represent. I mean, certainly from our perspective, I mean, you're going to see it's that focus very much on the old scrap. So a previously fabricated product that is melted down and returned to the bullion market. It will not include processed scrap, which is just the tight circle of material that flows between, typically between jewelry producers and refiners. And it won't include the bullion formatting that Neil H. mentioned earlier. From our perspective, scrap recycling can only come from a fabricated product. And for those of you thinking in terms of definitions, a fabricated product is something that has been transformed from bullion. So bullion goes to a refiner, is turned into a different form of bullion. It is not part of our recycling data. I mean, so some people may view that as recycling or scrap or whatever, but from our perspective, it's relevant for our investment series if there's been a change of ownership. If it's stayed with the same owner, then it's not something that impacts on the supply-demand balance. And it's maybe also worth mentioning that the central banks can feature there, that if they decide to upgrade their bullion, making it London Good Delivery or whatever, but there's no change of ownership, well then it won't, that flow won't appear in data because the central bank wasn't buying and selling, it held on to the same gold. And from the purposes of bullion entering and leaving the bullion market, nothing has really changed.
Yeah. So, for example, the Banque de France, when they upgraded their stocks using Swiss refineries, that wouldn't show up in those statistics.
Correct. Yes.
There's quite large flows. Okay, so your definitions, I think, are clear in the way you've output it into the report. If we look at the graph that Taylor's put on the screen now, quite clearly there's correlation there.
Well, the correlation with the price.
Yeah.
Yes. No, I think that's certainly indisputable that there is a very strong link between recycling and the price, but it is a complex link that all sorts of factors can distort the apparent picture. Crossing a price threshold, for example, can suddenly boost volumes. And if you see the gold price going over $2,000, you'll see a whole load of headlines, picks up interest. You're in India, it goes across 4,000 rupees per gram. Headlines, people watching the market, bam, you can get a sudden increase. Expectations can make a big impact, that if people are expecting the price to continue rising, well then why sell now? Let's wait a couple of months to get an even better price. And that's something that can be quite important in the emerging markets. I mean, India is a great example of that. You could also find that sort of politics or consumer sentiment can have a massive impact. That you could see a record price, say in Turkey, but no one's selling gold because they don't like the political backdrop and they'd rather hang on to a safe haven asset. So there's a whole load of things that can complicate that. We should say right from the outset that it's the local price that really determines things, not really the dollar price. So you could say have a currency crisis in Egypt and the local price goes stratospheric, scrap boom, but the dollar price might have done absolutely nothing. So clearly you can get that price, but it's kind of broken down or made complicated when you're looking at the global picture, because those sort of regional and country level factors can distort what's going on. And clearly, I mean, something at the second big area that's worth looking at is the pool of products, and specifically what's near market, what we would term near market stocks. Because even though the price has exceeded where we were at the beginning of the decade, volumes are down. And one of the drivers for that is a lot of the near market stocks in Western countries came out in that cash for gold period, and that's gone. I'll buy near market stocks, by the way. It's the stuff that households are very happy to sell. So it's separate from distress selling. So you've inherited a piece that you think is hideous, sell it. Why not? You don't need the money, but you just don't want this necklace cluttering up your drawer any longer. It's also probably worth mentioning, hopefully a one-off, 2021, that dip. It's even though the price goes up, you've got logistics. If people cannot get out to visit a pawn shop or whatever, or they just don't want to, then that's going to hit volumes. And that logistics story obviously explaining why 2020 barely moved, even though the price shot up. And clearly, overall, you're going to have, there'll be certain countries that see big waves of distress selling. But it didn't lift the global volumes because there were those countries that people just didn't want to go visit the local scrap dealer, scrap collector or whatever.
Also, it affects jewellery sales as well, didn't it? That people weren't going to jewellery shops to buy physical product.
That's very much the case, but the level of consumption today tends to have a very weak link to what's actually coming back for scrap. You wouldn't typically see much doing that churn within the same year in the majority of countries. And you will get times when that's not the case. Very active two-way trade, for example, in some emerging markets, and I think Thailand makes for a great example of that. But also, if you're considering the pool of products, that's barely impacted by the level of consumption in one specific year. you've got that cumulative consumption going back decades that really determines that how big the pool is.
Taylor, could you bring up the pool of products graph? Sorry, the Swiss gold bullion imports from Thailand.
Yeah, there we go.
Yeah.
So yes, you can see massive swings in flows there. Some of that is going to be price related. Some of it will be due to economic distress. And you shut down the country's tourist industry, and people may well be obliged to sell gold. So even if they didn't like the price, well, tough, we've got to sell it to get some money. This graph is also actually useful in a sense that we make estimates for the split in this flow for what's coming back from disinvestment and what is coming back from jewelry. But not all, it's a mix, and the analysts that cover Thailand will talk to refiners, collectors, bullion dealers, whoever, everyone we can, to try to make an estimate of that division. And once that's made, that would then feed into our data, because obviously that would have an impact on any concept of pool of product back in Thailand on the jewelry side. And it's useful for trying to understand the dynamic, because what motivates an investor could be very different to what motivates someone holding jewelry. The profit taking could be to the fore, expectation stories, who knows? But it will have an impact on the story, and by implication, what could happen in the future.
Well, now you've mentioned the future. What is the future for scrap volumes?
Well, we may see a relatively modest response, perhaps surprisingly, overall for the year. That it's difficult to see huge amounts coming out of Thailand if people cannot leave their residential compounds or whatever. And unless the price does something more interesting, well then again, after the fireworks in February, March, well then the price drivers has gone. And if the global economy continues to find a sound footing, well, that would restrict volumes as the level of distress selling goes down. So I wouldn't automatically say that you're going to see a great number for recycling. I don't have a figure to hand for what we're latest. I could try to dig that out of specific interest, but we'll actually be publishing that. We are in the process of updating our numbers. We've got the launch of the Gold Focus coming up in a month or so, and our forecast for 2022 will feature in that.
Okay. Look forward, because one of the things that we're doing, and I don't expect you to answer this question, is obviously we, in our data where we're tracking flows, and obviously there's going to be a hit to the mined production going into GDL refineries and GDL refineries. Can scrap volumes compensate for loss of mine production?
If the price signal is there, most certainly. I mean, if we're thinking in terms of where volumes were at the beginning of the decade, and we've seen the pool of product get bigger every year since, including during 2000, that there's plenty of scope there for the recycling to come back, and especially if the logistics chain has been freed up, that people can visit collectors, and collectors can quite happily concentrate those flows, get it to the refineries, and so forth. The whole chain becomes re-established properly.
Mhm.
And so I think there's plenty of scope for recycling to respond if the price signals are there, and that sort of dovetails with that sort of near market stock issue, the distress selling. I mean, people need a reason to sell, and it's the price is the obvious reason, but yeah, I mean, other factors can impact it. And if distress selling goes down, well, that's going to need a higher price then to motivate people to actually get out there and go to the effort of selling back their old jewellery.
Okay, so we focus mainly on jewellery scrap because that's the biggest portion of recycled material. But obviously, there's a lot of electronic scrap that's just ending up in landfill. Where does the gold price point have to be before that becomes economical?
From what we're seeing, I think the best way to look at the link between the gold price and electronic recycling is that it has to hold above a certain level for the recycling to be profitable. If the gold price were to fall below those levels, there's no reason that the official sector recycling chains will continue. Why indulge in a business that's losing you money? So you need gold to be the gold price to be at a certain level for the official refiners to be able to make money. Now, if the gold price then continues to rise, I would be surprised if we see much of a change, if any, in the volumes of e-scrap that they're receiving. That the big drivers of that are going to be legislation, the degree to which it's enforced, and whether, I mean, and a good example of that is where the metal is actually recovered. If it stays in the industrialized world, e-scrap has the potential to rise quite strongly because recovery rates are much higher in the formal sector, and you'll get much lower component reuse. Whereas if all that material goes out to some of the unofficial operations in the emerging market countries, you get much lower recovery rates, and some of those components and or pieces may be reused. I think consumer awareness is something else that's important here, that if consumers know that e-scrap is a good thing, they might make the effort to be more diligent with how they treat their old iPhone, iPad, old TV, whatever. And so there's a sort of a push to make from the consumer to making it more responsible in that sense. But there's very little that connects the gold price to, say, consumers' willingness to be more responsible with their flows, and they're not going to dig out that old PC from the back of the cupboard because the gold price is high.
Yeah.
And equally, if you see an office that just decides, right, let's upgrade our IT systems, that's a function of business demand. Gold price essentially irrelevant. So I think the main point to just remember, therefore, as long as we're above that threshold for the formal sector to stay profitable, that's the key thing, really.
Okay, so when we spoke offline, we're not going to see a parallel that we see in the PGM industry, where thieves are targeting auto catalysts in cars. We're not going to see people stealing your electronic goods for the gold content.
No, No, AutoCAD scrap and e-scrap operate very, very differently.
Okay, Neil, this has been great. We do have a couple of questions coming through, so we might jump around a bit if you don't mind.
Sure.
Oh, from my old colleague Stuart Murray.
Fantastic.
Thai exports to Switzerland. How is gold bullion defined?
That would be up to the Swiss customs people to make that decision. So it's whatever they think. So when they receive the material, a decision would be made on how best to classify that. And it's a surprisingly grey area. That sometimes you can see material move cross-border that we might think of as semi-manufactured, but it stays as a bullion in the minds of some customs authorities. And equally, we've seen chain of custody grain move cross-border, and it's been classified as semi-manufactured, whereas from our perspective, it's still bullion. So there's a degree of latitude that the customs authorities seem to have in determining whether it's bullion or something else. And the sender and the recipient may have a different opinion. And we've certainly noticed that with some scrap flows, that one country reports it as semi-manufactured exports. It's actually scrap jewelry, whereas the receiving country records it as a bullion inflow. So it's a surprisingly grey area, and it does make our life interesting.
Yeah, I mean, again, question from my colleague Sakila was where we know why the numbers are different. You can explain. I mean, you don't have to make everybody use the same definition, as long as you know what definitions are being used. But I think it is important that, yeah, we do call a spade, if it is a spade.
Yes, indeed, yes.
And also from a past life, seeing what quite clearly is bullion products being passed off as jewelry, to obviously to circumnavigate some sort of control is evident.
Yes. And that's something that we would certainly have to manage with our data, that whether it's best recording that as fabrication and recycling, or just netting the two off as a zero. Certain circumstances would require a different treatment. I mean, one thing that is worth pointing out in that context is that if you see a VAT carousel develop, so that never gets classified as scrap, because there was never any fabrication at the beginning. If people are making those fake jewelry bars and claiming it's melted down, or they've actually just bought gold, silver, bit of copper, melted it, and then it goes to a refiner. No jewelry was ever fabricated, so it cannot be recycling, and therefore it would never appear in our data.
Yeah, we've also seen that. So yeah, with bullion products being passed off as, so like you say, the VAT carousel. We're aware of some of those around the world where those various VAT fraud schemes are being the VAT is being exploited.
Yes.
Okay, yes. So Neil, thank you very much for producing that report and sharing your thoughts on this webinar today. I'm going. Do you have any final remarks before we close up?
Nothing that springs to mind, no. So happy to take more questions if they're there, but over to you on that point.
Taylor?
Excellent. Hello. So I am obligated to share the metals focus disclaimer, but thank you all for joining. It's been a pleasure to have both of the Neils. If you had any questions throughout the webinar, or if you again are watching this back recorded later and you would like to send us your questions, please send them to ask@lbma.org.uk. We will make this available this afternoon after the webinar has downloaded and been uploaded. So feel free to let us know if you do have any questions. Following this, we have 2 more webinars in the month of May. So as you know, we have Platinum Week coming up. It's starting in, I think, less than 2 weeks. It's all very exciting. So we have a recorded webinar on the 19th, and we're going to release our session, Growing Responsible Demand for ASM, which was the most popular session at our recent Sustainability and Responsible Sourcing Summit. And then the following week on the 26th, we have a CEO members town hall with Ruth Kroll. So that's the opportunity for members to talk open and freely with the LBMA executive in terms of what's going on and developments, etc. So if you have any questions about either of those, just let us know and we can help you out with either viewing them or joining them live if you are a member. We have 2 training days on the 9th and 10th of June. So an introduction to Local London and how to use Local London respectively. So that's the Thursday and the Friday. Again, let us know if you have any questions or you want to know what kind of content is delivered on the course. We'd be happy to talk you through that. We do have save the date for our Assaying and Refining Conference for 2023. So that is Sunday the 12th through to Wednesday the 15th. And we have a confirmed keynote, Mr. Leo Simpson from Metal Technologies. I don't know if you want to step in, Neil, and say a few words about this.
I'm really excited that Leo has agreed to be the keynote speaker at the A&R next year. We are going to be talking a lot about health and safety in the laboratory and in the refinery, and I think Leo is going to be in a very good position to present his thoughts on that subject. So really looking forward to it.
Great. And of course, we will send out further details as the planning for the conference takes place. I know, Neil Meader, you wanted to give a little shout out to the Gold Focus, which is being launched, I think, in June?
It is, yes, 8th of June. I think we've got 3 locations, London, Toronto, and I should know the third. I'm going to guess Singapore. My apologies if that's wrong. If you're interested, just go to the Metals Focus website and all the details will be there. And it'd be great if, yes, having an in-person launch. It's a delight to be back.
Yeah, no, and I agree. You know, again, much like you're having an in-person launch, we're excited to actually have an in-person conference as well coming up at the end of the year. So if you haven't registered already as well for that, do register for that. Or if you do want to know more about the Metals Focus launches, again, head to their website, or you can email us and we can put you in touch. I think that's all for today, but it's been a pleasure having you both on board, Neil and Neil. And thank you to our attendees. Have a lovely afternoon and a lovely weekend ahead.
Yeah, thanks Taylor. Thanks, Neil.
Thank you.
Goodbye.